First of all, let me back up. If you tune into TV and you are listening to the pundits and they are telling you what the market is going to do, let me promise you they don't know. And in fact, I was talking to somebody today who said, I've been saying the market's going to go down for a year. And it is. I'm like, okay, so that means you were wrong for 51 weeks, okay? And so remember, anybody who tells you they've got it, they don't have it. In fact, active managers of money, those individuals who are paid, whose full-time job is to outperform the market, that's their full-time job, that's what they do. Do you know the percent of them that consistently outperform the market over a 5-year period? Do you want to guess? 0.1%. Okay, it's not 1%, it's not 10%, it's not 100%. It's a very small percent.
Wow, that's really small.
It's really small. And of course, these individuals are often paid very well for doing this. So nobody knows. What I can tell you is the market's going to go down and it's going to go up. And it's going to go down and it's going to go up. And I don't know how much up and how much down, but it will be volatile over time historically. The stock market since the 1920s, so pre the 1929 crash, through the 80s crash, through the subprime crisis, has returned 9.5% annually. That's a friggin' lot of return. And a diversified investment portfolio has returned, we estimate, around 6% annually. By the way, put your money in a bank, it's close to zero these days. You can't get that 9.5% or 6% without these ups and downs that I promise you hurt my stomach too, okay? Here's the great thing. If you are investing, you should welcome this. Because today, you can buy the market, you can buy these securities more cheaply than you could yesterday or a week ago or 2 weeks ago, right? And, you know, over time, you'll sometimes, if you're investing regularly, say a little bit out of every paycheck, sometimes you'll buy high, sometimes you'll buy low, but over time, you should get these market type of returns, which again, can be life-changing for you. Now, if you've invested and you've only got a little bit of time until your goal, I hope you're not fully in the equity markets. I would never recommend that because that's when you lose money and it feels bad. What you should do as an investor is when you have a long-term goal, put that in equities, volatility, higher return. When it's closer to time for your goal, you're going to want to have a more conservative portfolio so you're not beaten about by these kind of markets.